Thank you for joining us at xm.com for the weekly Outlook. I'm Christina Marujos, and joining me today is Marios Hadjikyriacos, investment analyst, to have a look at the week ahead. But before we have a look at what's coming up, Marios, I'd like us to talk about the overall picture we're seeing, especially in the U.S. It looks like markets are moving in a parallel universe, one would say. We're seeing the NASDAQ conquering new record highs, while virus cases are increasing in the U.S., not to mention the growing geopolitical tensions. Why has this paradox risen, and are markets doomed for a downside correction?
Hello, Christina. Well, there are several reasons for that, for why this disconnect, let's say, between financial markets and the economy is going on right now. But the biggest one is probably stimulus, both from governments, but especially from the Fed. If you add enough money into the economy, eventually that finds its way into the stock market, and that has been pushing up prices, and it has also been making investors turn a blind eye to the many, many risks that we see around us. Now, are the markets doomed for a downside correction? I wouldn't say doomed. However, we have front-loaded a lot of optimism into asset prices. And right now, the debate that will determine where we head next will be the stimulus story on the one hand against how the virus picture is evolving on the other hand. So it will be very crucial to keep an eye out on US virus numbers. They've been rising in the most populous states lately, and if they continue to rise, that could throw, let's say, a wedge into the market's optimism. Now, another thing I would add here is that over the coming days, as we approach the end of the quarter, we might see some rebalancing flows from big funds away from stocks and towards bonds. So that would imply some downward pressure for stocks as we approach the end of the month and the quarter.
New Zealand now is one of the few countries that has managed to eradicate the virus, and growth outlook seems much better as the lockdowns were lifted quite early and probably won't be coming back. The RBNZ is meeting on Wednesday, where it's not expected to change its policy. So how do you think the Kiwi will move?
Well, here's the problem for the RBNZ. Domestic developments have clearly been better. The lockdown has been lifted much earlier than the Reserve Bank had assumed in its latest forecast, so that will be a positive development for them. Now, on the other hand, if they appear too optimistic in their statement, that could push the Kiwi even higher, and that's the last thing that they want, because that would make their exports less competitive abroad and it would tighten financial conditions. So the RBNZ wants to strike a balanced tone. Yes, the recent developments have been better than expected, but we are still here prepared to add even more stimulus if needed. So I think the tone of the statement will be relatively balanced, and therefore that could limit the reaction in the Kiwi.
On Tuesday, the European Union and Britain will report preliminary PMIs for June. Could the euro and pound therefore find their much-needed support there?
Well, maybe for the euro. Most of the countries in the euro area did open up their economies. They lifted the lockdowns in June. So I think that optimism will be reflected in the European PMIs as well. However, the same might not be true for the British ones, because most British stores only started reopening a few days ago, this week to be precise, and some businesses like pubs and restaurants are still closed. So I would expect to see a much smaller rebound in the British PMIs. And as far as the pound is concerned, I think that Brexit risks will eventually come into the mix again, and that would be a negative catalyst for the pound going forward.
Finally, having a look at the U.S., we're expecting a flood of data this coming week, but these numbers could pass unnoticed, especially since most are somewhat outdated. Since data hasn't been the main driver lately, what could dictate the dollar's moves?
It's going to be about risk sentiment. So the dollar has been acting like a safe haven during this crisis. That means it's moving in the opposite direction to stocks, for example. And that also means that pairs like euro dollar and cable now move in the same direction as stocks. So it's all about risk sentiment nowadays. And in that sense, the most important variable is how quickly US virus cases will increase.
Marios, thank you so much for joining me and having a look at the week ahead with me. And thank you for watching the Weekly Outlook here at xm.com.